Welcome back to the Money and Wealth Show. I'm Sterling Fox, and our special guest is Steve Forbes from Forbes Media in New York. Mr. Forbes is the chairman, CEO, and editor-in-chief. Steve, people are saying all over the internet, magazines and print and elsewhere, that you are one of the secret, shadowy money guys behind the Tea Party movement. Are you, in fact, a financier of that political entity in America?
Sterling, I'll reveal to you my plot to take over the world. Yes. I wish I was that powerful. My role has been I sit on a foundation board that works with some of the Tea Party activists and helping them get permits, being a clearing center. But in terms of writing checks, no. What's made the Tea Party, I think a lot of the media has missed it, certainly the Democrats have missed it, what's made them so powerful is precisely there is no leader. It is an amorphous grouping, people getting together, using the internet the way Barack Obama used it in 2008.
Yes.
It can be used by other people as well. Mm-hmm. So that's what's made it powerful, is that it truly is a citizens movement. Most of these people have not been involved in politics before. They're not so much angry as extremely worried about what Washington is doing to the dollar, about the binge spending, about the taxes coming, the massive regulations, what we're doing to our healthcare industry, finance, these semi-nationalizations that have taken place. So people are rising up. They say this goes against the American character, the American grain. So they got active, which is what citizens are supposed to do.
In a democracy, you bet.
And in terms of anger at Wall Street, if you had, a stable dollar, you wouldn't get those outsized profits, just as you don't get outsized profits in the oil industry when the dollar is stable.
The gold was something you mentioned a few moments ago in terms of its prices, and it appears to be on quite the run now. Is that being driven primarily because of concern for not only the American dollar, but paper currencies the world over? People are tired, if you will, worn out, more like it, with the uncertainty of it all, and are going, look, I've had enough. I'm going to buy some physical gold and bury it out under the tree in the backyard, and at least I'll have something. Do you see that?
Well, when central banks print too much money, whether it's the US dollar or the euro, guess what happens? The nominal price of gold goes up. It's not so much gold getting strong as currencies getting weak.
Right.
And you see it with the dollar. If the Fed made a credible move that the Obama administration announced that truly we're going to have a strong dollar policy, you'd see gold quickly go down $300, $400 an ounce, because a lot of that price is of anticipation of bad things to come. The U.S. government's made it clear it wants a weak dollar. Well, markets aren't going to wait for it to weaken. They're going to say, okay, it's going to get weak. I'm getting out of it now.
Right, right. You mentioned Bill Clinton and his strong dollar policy a few moments ago.
Right.
Even though you are among the staunchest of Republicans, you seem to have a grudging admiration for Mr. Clinton. What do you see as the primary difference between President Clinton and President Obama?
Well, I think aside from Clinton's obvious political skills, knowing how to beeb and weave around when things go wrong, is that he doesn't regard business as evil. He may have his desire for certain social programs, but he doesn't see business as malignant evil, something that's got to be crushed or at least tightly regulated. And I think that's a fundamental difference. Also, I think Bill Clinton is, by his very nature, coming from Arkansas, the South, being a centrist Democrat, doesn't mind being in the center, doesn't mind compromise, doesn't mind trying to bring people together. And when he took a hit, he read the returns and responded to them. Whereas President Obama, you get people who supported him in the business community feel almost betrayed that he is anti-business. They feel it when they talk to him. The words just go right over his head. And as soon as he gets out on the stump, he's pointing the finger at him, saying, "You put blind faith in blah, 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 blah." People don't like that.
You ran for president for the Republican nomination for president against Bob Dole and then against George W. Bush.
Right.
What lessons did you learn from both of those experiences to the point where I guess, why didn't you win the second time around? You know, first time, okay, he's a neophyte. Second time, now he's got it together. What happened?
Well, didn't get enough votes. It's more fun to win than to lose. And unlike free markets, where you can have a number of companies succeed, in politics as in sports, there's one winner and everyone else takes the hindmost.
Right.
And I think we waged some good campaigns, got some good ideas out, and I think those ideas, like the flat tax, you have it here in Alberta, I think we'll see it in all of the United States in a few years. But got some good ideas out, but not good enough to win the elections. It's the way life goes, and so you lick the wounds and move forward, you hope.
Indeed. Now, in Canada, our finance minister gave us an update a short while ago indicating $55 billion budget, or deficit rather, this year. We're likely to be in significant deficit for at least the next 5 years, but after that we're going to turn it around and pay it all off very quickly. Hopeful, wishful thinking, I suspect, but the Canadian economy is very much dependent on the United States economy. You are our biggest customer, and for Canadian exporters of any commodity, if the next door neighbor or your biggest customer isn't buying, you're in trouble. This is not unique to Canada. A lot of the world sells its goods into the American marketplace. How do you see that marketplace evolving over the next few years for the benefit of us up here and the rest of the world who needs your consumers to be enthused about buying our goods?
Well, this gets the whole myth of decoupling, that you especially saw that idea in Asia, that yeah, the U.S. can go down the tubes, but Asia can prosper. No, we're all in this together, and while the U.S. proportionally is not as big as it was in the global economy as it was, say, 20, 30, 40 years ago,
right,
still a major factor. And if one of the biggest economy gets in trouble, it affects all of us. So that again gets to the need for the U.S. to get its own economic act together. Canada would benefit from it, we would benefit from it. And this idea that treating the dollar as a weapon to give the U.S. goods an unfair advantage and punishing unfairly imports is preposterous. Those things are very, very destructive. But it's amazing that grown-ups, looking at the last 100 years, haven't learned that basic lesson yet.
30 seconds or less in our final moments together, Mr. Forbes. Any words of survival advice for the individual investor trying to just get through all of this and somehow or another come up with their head above water at the end of it all?
Well, in addition, I hate to mention gold and having that as an insurance policy now because the price is going up so much.
Right.
Should be an insurance policy, small part of your portfolio. But I'll say this, even though the U.S. economy is not doing what it should, even though we're going to have a couple of more years of real turmoil in the United States, this is precisely the time to go into, if you have the money, put a certain amount in each month, what you can afford, into equities. Because you use a broad-based fund, an index fund, a couple of index funds, low fees and the like. You can use exchange-traded funds or whatever. But the key thing is, this is the time to buy, because even though you may look like an idiot or feel like one when the market takes a hit in the next couple of years, it will come back in the United States. The U.S. will come back. Equities will come back, just as in the early 80s, when the Dow was down to 800. Well, it didn't stop moving up until it got to 14,000. We're going to see that again in the next 20 years.
Our guest has been Steve Forbes, President, CEO, and Editor-in-Chief of Forbes Media in New York. Steve, it's been a real pleasure meeting
Sterling,
you.
thank you.
You're a busy guy, and we appreciate your taking the time to join us here on the Money and Wealth Show.
Appreciate your time, too. Thank you, Sterling.
We'll be right back.
Hi, I'm Larry Ray, Chairman and CEO of Molycorp Gold Corp. Our major project in Nevada is magnesium. We have a 43101 resource of 52 billion pounds at $1.30 a pound. Do the math. Go to our website at molycorp.com or phone me direct at 604-531-9639.
Tax Tips with David Ingram.
The windfall elimination provision is really serious. If you've been working in the States and you're living in Canada now, or a Canadian who's moved to the States, and you apply for your Social Security, if you haven't put into it for 30 years, they do a clawback based upon the fact that you've been putting into Canada Pension Plan. Really important to understand that in advance so that when you're retiring, you don't expect more money than you're going to get. That's a tax tip.
And that's our show for this week. Our thanks to David Ingram and to our special guest, Steve Forbes. Thanks also to Linda McCrossan and her team here at the Sheraton Vancouver Guilford Hotel for the hospitality. And thank you for joining us. If you have some thoughts about today's show that you'd like to share with us, send us an email to comments@themoneyandwealthshow.com. I'm Sterling Fox. See you next time.